Hi everybody, this is Brian Shannon from alphatrends.net. Today is Friday, June 13th, 2014. Let's take a look at these markets. The S&P, the Nasdaq, Russell, and financials all pulled back slightly this week, but we did have the semiconductors up real strong. Oil as well over some tensions in Iraq, and gold was up as well. So let's take a look at the action on the charts here. The S&P 500, let's start with the daily chart actually. We can still see that we're obviously in a primary uptrend. Anyone who argues that is a fool. We have, of course, all-time highs here just 5 days ago, and we're pulling back right now. So far, it's looking like just a normal pullback within a primary uptrend. And we look at a 30-minute chart, we could see that, we've been riding this rising 5-day moving average in this trend line. We broke that and then dropped below this support right here at 125 and a quarter. After that, we'll drill down to a 10-minute time frame right now. We still have that 5-day moving average, but here's where we broke below that 195 and a quarter, and then we've seen a little pattern of lower highs and lower lows. So for the buyers to really regain control with confidence again next week, I think we need to see the market back up above 195 and a quarter. Until that happens, I think it's just cautious going into next week. And we've had a real strong rally. If we're to see further pullback, we want to look at important levels such as Fibonacci areas that would bring us down to 192.30 for a 38.2% retracement. You can see the 20-day moving average is at 192.19. So perhaps we see a little bit further pullback down into this area. That's certainly possible. The primary trend is higher, so if you're looking for short opportunities, stick to the stocks that are in the downtrends and wait otherwise for stocks to reset up again on the long side. And we've had some great winning trades in alpha trends on the long side this week, and a couple shorts as well, but the longs actually worked better. So cautious going into next week as we are below a declining 5-day moving average. However, we're in a primary uptrend, and when we have conflict of trends on different time frames, it just says slow down a little bit, let things settle, and see whether or not this is the beginning of a much stronger pullback, or if this is just going to find some support and move back higher. The Nasdaq, as we had mentioned, was down slightly, down a 0.5% this week, and not really much damage done. What we can see here on this 30-minute chart that goes back to the beginning of May, that we did break that trend line, and then some important support right here at about 92.5. So going back to the 10-minute time frame, we can see that with a little bit more clarity, that this 92.5 level, which was support, was broken on Thursday, and then today we saw early in the morning that after gapping up, it ran up to that area, found some resistance, and then sold off. So in order for the buyers to really think that we have the control back, the buyers are back in control here in the Nasdaq, I think 92.50 to 92.65 is the area where we would expect there to be a little bit further resistance from this prior support. But if we get back above there, then I think that we can look at this as an important higher high right here after this higher low. So kind of neutral on the Nasdaq with a slight bit of caution because the 5-day moving average is declining. If we do see further pullback, this looks like a real logical place for it to find some potential support down at the prior resistance from back in March, and then of course just at the end of last month when we consolidated before this other push higher. So that would be about 91 and a quarter, 91 and a half is where we would expect to find some buyers if this market does continue to pull back. The Russell 2000 for the week lost a little bit of ground there as well, down only 0.25%. And this market, as you know, a week and a half ago, I was talking about how I thought that the buyers could regain control above this 112.60 level, which they did in fact do, and we saw a very nice run that brought this market back above the volume-weighted average price year to date, and that's what we were talking about as well. So we remain above the volume-weighted average price year to date, and what that means is the average participant in the Russell 2000 is now in a winning position. That is the average long participant. We have a pattern here that is emerging with these higher highs and higher lows, and on the daily time frame you can see we pulled back right to a prior level of resistance in here, and so far that's looking like support also at a rising 10-day moving average. So this week's low, which occurred today at 114.66, I think is going to be important next week. So let's just call it 114.50. We are still in this market. We're looking right now at a 10-minute time frame with a 5-day moving average. average. We're a little bit more intermediate term cautious until we can get back above that 5-day moving average in this prior little band of support between 115.80 and 116.10. This is where our resistance lies for right now, but back above that level puts us with a nice little short-term higher high, and I think you could get long in there with a stop even as close as 115.25, but if you wanted to be more cautious, perhaps down underneath that low, so about 114.60ish or so. But I think that we've got a very nice pattern here in the Russell 2000, and it looks like to me that we should be able to continue to move higher. What would take that away, I think, is if we were to break below 114.50 and stay below that. If that were to happen, then obviously the sellers would have regained control of the intermediate term. You don't want to be long. You don't want to be long quite yet either, but you want to be, this is where we anticipate. This is where we anticipate that the buyers take control, but we wait for price confirmation before we actually participate in the trade. So it's really kind of more neutral in the intermediate term within a bigger bullish picture, and the Russell 2000 holding its ground and outperforming a little bit this week. The big winner this week was the semiconductors, and a lot of people were starting to ask me the last couple days whether I thought they were short because they had just run 10%, and I said no, the trend is still higher. We're still above a rising 5-day moving average. It's definitely extended, but you don't want to sell short until we break below support and we're below a declining 5-day moving average, making lower highs and lower lows. So by holding off on any shorts for a pullback, obviously you missed getting beat up pretty badly here today as the semis were up 1.6%. That was due to Intel. Intel had news and they were way up. So the semiconductors remain in a very powerful uptrend. It's easy to say that they're extended, that they're up too much, that this rate of ascent can't sustain itself, and that's true. But rate of how much can you tolerate in losses while you fight a trend? It simply doesn't make sense to be short until the market turns back down. And right now we don't see any evidence at all of that. We closed right around the volume weighted average price for the day. So I think that next week the key level in the semis is still going to be between 46.70 and between 47.60 and 47.90. That's our more important band of support that we want to see hold next week. As long as we continue to hold that, it's innocent until proven guilty. If things change, that's what I update every single day at Alpha Trends, and the bronze level goes through these markets every single day, and I just lowered the price a couple weeks ago. It's super inexpensive, so if you want to take a look at this analysis every day, take a look at alphatrends.net. XLF, the financials, have pulled back to this prior level of resistance, so it's attempting to find support in here. 2250 to 2255 on the daily chart is what's showing us as an important level. We are, of course, at multi-year highs, or just pulling back off of them, and this market broke out. It's looking like a healthy pullback right now. We are below a declining 5-day moving average, so it makes sense that we should be cautious in here. Let this thing kind of bleed out, figure out where it's going to find some support, and then look for potential entries. I don't think that there's a strong advantage to selling short a market like this unless you're going to do it for a very short period of time. But similar to the semiconductors, news and surprises tends to follow the direction of the trend, and the people who were thinking it was up too much, it can't sustain itself, etc., got beat up pretty badly on the short side here today. So don't make those mistakes. If you're going to short this, the primary trend is higher. Maybe you could make a few pennies, but the sum of the rallies in an uptrend are always going to be greater than the sum of the declines. So there's naturally more opportunity mathematically in an uptrend to the long side. Let's take a look at oil. USO oil's breaking out here, and that has a lot of people concerned. On the daily time frame, though, this USO, which I'm not really even sure represents oil the best, but you might expect it to encounter a little bit of resistance coming up here shortly. The gold is still, in my opinion, if they don't scare you out, they'll wear you out. It bounced some here this week, and in fact, it actually had a pretty decent bounce, up just about 1.95% for the week. But it's coming now into this prior level of support support, which has the potential to become resistance in the declining 50-day moving average. Again, a declining 50-day moving average, you simply can't trust rallies. Someone was asking me last week, hey, what about NQ, Brian? I really like this thing. They had good patent news or whatever the news was. I said, listen, it's in a downtrend. It's guilty till proven innocent. I would expect that this rally attempt in here will fail. Plus, it's at a prior level of support, which had the potential to become resistance. So anyways, these are the types of stocks to stay away from. They're good for a bounce. Gold is good for a bounce if you play gold, but it's still in a primary downtrend. Let's take a look at the bonds. Bonds are still in a primary uptrend, and they're trying to find support, as they have all year, right near this rising 50-day moving average, and they've got some important support in here near term in this area. But bond market is still advancing. As far as some individual stocks go, Apple started pulling back a little bit here, and we can see that really for the first time since they reported earnings, the stock is now below a declining 5-day moving average, which tells me it's in pullback mode, that anyone who is swing trading should be on the sidelines now and looking for some stability before looking for a place to get long for that what seems like an inevitable move back up towards $100 a share. But right now it's underneath a declining 5-day moving average, so just let it settle in. Don't be in a big hurry to purchase the stock. I've got a subscriber who was asking me about Priceline all week. Actually last week as well, saying, does it look like a buy soon? And I said, well, listen, we've still got a declining 5-day moving average. And even here the other day, I told them, don't chase it. It's a declining 5-day moving average. Wait for, if we're going to get above the 5-day moving average, wait for the pullback, a little bit of consolidation, let that 5-day moving average turn higher, and then you can get involved. But while the 5-day moving average is declining, stay away from these things. Twitter got up to that declining 50-day moving average, so I think that Twitter has probably expended quite a bit of its energy in here, and that if you traded it alongside this week, have your stops super tight at this point, because again, that declining 50-day moving average will often act as resistance in that general area. I think your worst case stop at this point ought to be just about 35.75 if you're long it, but there's no reason to hold if it breaks back below there. One stock to keep an eye on for next week, I think, is SunPower. I actually own some calls in this, so just to let you know, I bought those today. This one really looks like it's getting ready for a much bigger breakout. It's been consolidating for about 9 months. It had a nice shakeout here a couple months ago, and now it's knocking on these highs. The highest it's ever closed was on this day at 35.90. So we've only had one day that it's closed, I can't say ever, this year, and certainly the last several years. So it's going back, I guess, to 2009. It hasn't closed at these levels since then. But I think that, it looks inevitable that SunPower will get up towards $40 a share. There's a decent sized short position. It's not massive, but the stock, right now, worst case stop would be below this level. But that's a good one to investigate a little bit, maybe over the weekend. And if you're interested in these types of ideas, these are the types of things I bring to the table every single day at Alpha Trends for silver and gold subscribers. So thanks for tuning in, and have a good weekend.